So I'm just going to go back to the first example we were stating. Okay, so there's one or two ways you can actually go about this. You can either say, look, you're going to go to the specific item like the income statement or the balance sheet, and you can manually capture these entries, or you can use the import function, which is actually quite a lot quicker, and then you can map from the items that are not automatically mapped by the system. Okay. Again, this will tell you if you're making a profit or loss for the year, and if you go to your balance sheet, it will also give you. You're seeing there the retained earnings. You can import the retained earnings from, or input the retained earnings from last year in there as well if you don't want to pull in comparative figures. In this case, it was just a loss. That's why it's included there as a minus. And you will see that your total assets equals liabilities and equity. So in essence, your balance sheet does balance before you continue. If for some reason your balance sheet did not balance, so let's just say, I'll show you this. So let's say, for instance, that was not there, the 60,000 was not there, and you did that, you're going to get a prompt that says balance sheet does not balance, please review totals. And you would need to go back and actually say, okay, the balance sheet didn't balance for the following reasons. So you are going to get a prompt to tell you, look, and this is also applicable when you do the import as well. So the balance sheet did not balance specifically. So I see it's back into balance. So all is good and all is well in terms of this. Okay. So that is the import or capturing of data in the program specifically. So the program is actually quite robust in the sense that you can capture large volumes of data all at once. I mean, you can import this pretty much at a moment's notice, and then you can use bulk mappings to assign your specific balances. And I'll show you how this looks on the reporting in just a bit. Okay, going back to, this is what we're saying. You need to go, just tell you what it is, where the system can actually find this on your desktop, and then you can automatically map this based on your preference. Import files need to be in CSV format, of course. Yeah, this is the bulk mapping we were speaking about. So you simply select this, go to your category, and categorize your specific amounts based on what kind of mapping you are specifically looking at. Okay, that's pretty much straightforward. Just want to go back to, okay, so that's the bulk mapping. We did talk about the bulk mapping. Okay, so statement of comprehensive income, or your income statement. Okay, what does this look like on the program? I think you've seen what this looks like. So again, you have your income on the left-hand side, you have your expenses on the right-hand side, and you can pretty much, it totals up everything income-wise versus expenditure, and it will give you your profit and loss for the year specifically. Okay, going back to the program, this is pretty much what it looks like. And in this case, there was the loss. I did show you how to capture additional information to make it a profit. So let's just say, for our purposes now, we wanted to make this a profit of 1. So I'm adding in additional sales, the value of 1.5 million. So it's going to revert into a profit. But I also want to add in an expense. So let's add that one. We're going to add in a new expense. So we're saying it's an expense. I just want to show you, and this is going to be applicable when we get to the new legislation as well, in Section 23M. So if I say, look, I had foreign interest that the company paid, Section 23M, you can just say foreign interest there, and I'll capture this. I just want to leave it as a blank here so we can input this as well when I show you the applicable legislation as well. So I'm just going to put that in there. So there doesn't have to be a balance. It isn't going to have any effect on my profit for the year. So I'll leave it in when we do the new legislation as well. So this is the income statement. I'll show you how it looks on the reporting as well. So if I'm happy with this, I can just say save, and then you can cycle between reports. And on the reporting of the income statement, it actually looks just like this. Okay. So I'll zoom out so you can actually see this. This is the baseline of your reporting. You're going to say company's income statement, company, and yeah, this is going to be putting through from all the information that you captured on the first initial screen. So Company Taxplanner, this was the company's name, registration number, the tax reference number specifically, and it's going to list your different tax years as well. So it's going to give you your normal accounting split, which we have become accustomed to, which is inclusive of your revenue, cost of sales. It's going to work out your GP percentage, which is going to be your or your target GP, your gross profit versus total sales. And you will see on there as well, it does have a comparative figure, so you can actually look at like-for-like comparisons year on year to see what your target GP is doing, what your sales were year on year, And later on, we're going to have another option there that actually gives you the percentage of variance between your sales. You can see growth in sales versus growth in cost of sales. So you can use this as an effective, not only as an effective planning tool, but you can use this as an effective budgeting tool to see, okay, what your sales have been doing, or you can use this as a forecasting tool to see where your company is going, or what your financial position or information has been like for the last few years. Okay, so this, again, this is pretty much the normal stock standard layout you would see on your financial statements: revenue, other income, your cost of sales, and your operating expenses. Now, all the expenses that you mapped initially will be accumulated onto here as well. So you will see things such as accounting, auditing, bank charges, depreciation, all that kind of stuff. So there's quite a bit of provision there in terms of accounts that you can select specifically. And right at the bottom, you will see total expenses and your profit and loss before tax. The tax for the year will be calculated, and you will get your profit after tax specifically. So you can use these reports. You can customize these reports. You can input your company's logo on there. So there's quite a bit of customization you can do with these reports, specifically for your statement of comprehensive income or your income statement specifically. Okay, going back to the financials tab. So this pretty much is all the same. You need to capture your assets. You just need to tell the system, A, is it a non-current asset or is it a current asset? And just in terms of the reporting, so very important, non-current assets, you're not expecting to realize the benefit within a 12-month cycle versus a current asset, which you are expecting to realize in a 12-month cycle specifically. Okay, so that's fine. I think that was maybe 600,000. I don't know why this has gone awry. Okay, so the balance sheet did balance. I don't know what I clicked now. Oh, I changed the 1.5 million, so that's why it wasn't balanced. Okay, so let me just change this back. Okay, so now the balance sheet balances again. Okay, so you will see this. There's your retained. This is your balance sheet. Assets versus equity and liabilities. You will see your retained earnings pulling through here. And of course, your share capital and all your other equity items as well. The reporting for this pretty much looks exactly the same as you would see on a normal set of financial statements. Again, being pre-populated from the information you captured initially. So you will see your non-current assets versus your current assets versus your equity, which is your retained total equity, and all of your liabilities will be sitting on there as well, just to give you a breakdown of each and every one of your different balances. So yeah, with comparative figures as well, just to show you what this will actually look like. Okay. Pretty much all the same you would see in a normal set of financial statements. And again, you can customize your own logo. You can pretty much put anything in here that you would want to do. Okay. Back to the financials tab. Okay, so we've discussed the data function. So this is still the source data. So if you want to remap, you want to reissue, or something isn't the way you thought it would be, or there was a change or anything, you can, at any time, you can go onto the specific and you can change the mapping of each and every one of these specific balances that you have captured or imported. We have gone through the balance sheet. Again, you can do this by virtue of a manual capture, or you can import this. You want to save the changes? No. Are you sure? Cancel. Yes. Okay, and you can manually capture this as well. Spoken about the income statement. This is going to give you a running total of all the credit balances or income balances in your income statement versus the expenses. It's going to work out your profit and loss before tax in this sense. And then we have what we call an adjust or compare tab. Okay, so this starts out with the balance. So your profit and loss before tax, it's pulled through to here. So that is the starting point where you can actually make tax adjustments and all those types of things as well. So in this case, there was a loss. So I'm just going to pull it into a profit scenario so I can just show you how this works in real time. So if I say add, that's why I wanted to add in the additional 1.5 million worth of income. Okay, so now it is making a profit. Adjust and compare. So you're going to see 39.6, and that you are getting straight from your income statements specifically. Okay. Now the system allows you, so this is in essence your normal tax computation, which you would see on a lot of financial statements. So this is allowing you to make adjustments to the existing data that you have captured. Good example, let's use a good example of what we see here. So you've imported this data. Now you're seeing, okay, there's penalties and fines on here of 236544. Okay, for accounting purposes, this would have gone through the bank. This is deductible. For tax purposes, obviously you can't deduct penalties and fines off of your taxable income tax purposes. So where are you going to adjust this? You are going to adjust this on the adjust and compute tab specifically. Okay, so you're saying, okay, calculate adjustment. And if you want to add an adjustment, you say add, you click that button there, and you say, okay, what was this? This was, so now, and it gives you a standard drop down of all add backs and allowable deductions which you could possibly have. So let's just say in this case, let's see, okay, so accounting interest payable, depreciation, it talks about donations, it talks about all those different things. Let's just see, section 20, pretty much gives you a lot of options here as well. So let's just say there's provisions. Just want to make sure it's in. So it was a deduction, so it should be an add back. Let's just say this was penalties and interest for accounting interest. So let's just say fines and penalties. Okay, and it was to the value. Okay, so let's just save it. So you know it's there. And you're going back to your income statement 236544, 236544. Okay, go back to this tab, and you would say 236544 being non-deductible specifically. Okay, let's just see. It should be an add back, so it reduced your taxable income. It's not deductible for tax purposes, so your net profit or loss should increase by the value of 236544, which it does. Okay. And of course, if you did have an assessed loss, one of the new changes we'll be talking about is the limitation of the assessed losses, which is also built into Company Taxplanner. So one of the big advantages of using Company Taxplanner is you don't need to go look up every time the legislation changes. You don't need to go look up every time there's a change. The program will implement these changes for you and keep you up to date, especially if you're a person or an individual that is in a smaller type of practice. You don't have the time to go and look up all of these individual changes. The company, the profile will, or the software, I would say, will do that for you as well. Okay. Let's say you had an assessed loss brought forward of 400,000 Rand. Okay, is that 40,000? Okay, let's just do that as well. Taxable income, that should just be a comma. That's fine, and that gives you, yeah, I'll show you now how the limitation applies as well. So assessed losses, let me just see. No, it's not. Taxable income, that's fine. Okay. But anyway, you can input the assessed loss there, it will take it into account in working out the company's taxes due for the specific year as well. Okay. One of the things the software also caters for is the new Section 23M interest or the limitation that has been placed on your foreign interest as well. So yeah, I'm not going to go into too much detail on what the specifics are, but it takes into account the limitation, the 30% limitation on foreign interest. So let's say you paid, well, the company had foreign interest in which you paid in the year of assessment of, let's say, 50,000 or 25,000 Rand. Okay, so then you just input it there, and it takes it into account in your adjusted profit and your compare. I'll show you how the reporting looks on this just now. And yeah, so this is the screen you will use to make all of your specific adjustments to your tax income. I'm going to show you this on the reporting just now, and on the compare tab as well, it will give you basically a summary saying this is what your income was, this is your adjusted gross income, this is the value of all adjustments, this is your net profit, this is your assessed loss, and this is your taxable income as well. Again, for the assessed loss limitation, you have to look at taxable income. So if your taxable income is less than R1 million, obviously it's not going to be applicable. If it goes over R1 million, then there will be a limitation of the 80% as well. So this is simply taking the 210,000 times by the applicable taxes due, and it's working your tax or working out your tax due specifically. But this is just a summary of all the information that we captured right here as well. Yeah. Okay, so you will see that as well. You can input the data from last year assessed as well, and this all gets summarized on the compare tab specifically. So this is a normal company. So let's say, for instance, you wanted to do a comparison, and you can actually you can compare scenario by scenario basis. So you can say, look, what happens if this is an SPC? What happens if this is not a normal company, and so on and so forth. So you can use this functionality to actually compare companies like for like. Okay, I just want to show you. Okay, so we did capture on the financial screen. We did capture the foreign interest as well. Just want to show you what the tax report actually looks like. So we did the income statement, we did the balance sheet. The companies listing, you can see the list of all companies or entities that you have applicable data input if you want to look at your specific mappings. So looking at the tax report, this is simply a summary of we've already captured on your income statement. To get to your, in this case, there was a profit before tax in this case. So if you're going to the second tab here, it brings up the tax computation specifically. And what you will see is if you go back, it still starts in this case with your profit or loss before tax, okay, which get carried forward, and this amount will be adjusted. So there's going to add back, and so there's an add back for the interest portion, the deductible portion. The system pretty much works out, takes into account all the specifics that need to be addressed for the specific limitation, and it already takes into account what the effect on your taxable income will be. In this case, it all gets pre-populated here as well. There's the manual adjustment that we included was the accounting interest, or let's say accounting or penalties and fines, what have you. The point is it wasn't deductible for tax purposes, so it's adding it back. There was your taxable income before your assessed loss. Your taxable income before your assessed loss was less than R1 million. So the assessed loss brought forward, but could be fully utilized and could be fully set off, giving you a net taxable income of R210,000, giving you a tax liability of 56,824. And again, you have a comparative function on here as well. Gives you a company tax rate, which is now changed from 28 to 27%, and it gives you an effective tax rate as well for income earned and taxes paid. Okay. Let's see. I just want to show you one more thing. So let's just say for our purposes now, let's say your taxable income was even more. Let's make this a lot more. I just want to show you what this does. Let's just add an extra 0 on here as well. But you will see that the program is actually quite user-friendly. It does give you a lot of customizability in the sense. I just want to show you what the effect on the report is going to be now. So if you're looking at the tax report, I just want to show you there as well. So again, it says profit before tax actually increased quite a bit. And there's your Section 23 exemption. But now you will see, obviously, taxable income assessed loss brought forward can only be partially utilized, and this is going to have an effect on your taxable income specifically. But the assessed loss is pulling there through there as well. So inputting it on the system is quite simple. You just include it in there, no minuses, no nothing. Just input it under there, and you will get the assessed loss. And this is the assessed loss as per your prior year ITA, as per your signed financial statements as well. Okay. Okay, so let's go back to the presentation. I just want to get that up here as well. Okay, so we did talk about the income statement, quite some detail, statement of financial position, your balance sheet. Again, a lot of in terms of customizing this, there's a lot of things you can actually customize on the program itself. Has a lot of standard options it gives you, and it has that balance check to just make sure that you are balancing when you are importing data. So it's very important before you're using the data just to make sure, this is my expected profit. My balance sheet does balance at the end of the day before you start capturing information and so on and so forth. The tax computation, or the adjust and compare, as we like to call it, you saw all the options you could actually have there. It takes into account the assessed loss. It takes into account any taxes paid, any add backs, any deductions in the year of assessment. Just makes it a lot easier when you're filling in the entity or the company's income tax return, because this will mirror what you've seen on SARS, so non-deductible, non-taxable. So it will just make it a lot easier when filling in the actual return as well. Again, if you want to know where to input the assessed loss, it will simply be assessed loss brought forward, and then this will be subjected to the new 80% limitation depending on what the taxable income is for the year of assessment. Okay. So again, you don't want to worry about let the system handle this. The system will do all of this for you. The system is there to help you. It's there to give you confidence in your practice specifically. I just want to show you this on the compare side as well. So let's say this was a company, and this was scenario 1, meaning that you're taking all the same income, expenditure, and what have you. If I say, look, this is a normal company, taxed at 27%, and this is an SPC, and I don't know what the SPC rate is, this will use this. Okay, let's just make it a little bit much, but let's just edit this quickly. Again, you're already getting a feeling for what the program can actually offer you. There's a lot of customizability here, very user-friendly to use. Just want to get you back to the compare tool. So a lot of times you find the client asks you, okay, what are the benefits going to be if my company is an SPC versus trading as a normal company? So you have the source information. The tax due was 56,000. SPC, as you know, is taxed on a sliding scale depending on the income. So the difference in tax, if someone was calling me today, I could say the difference in tax, normal company 27%, SPC 6279.70. So you can clearly see the difference. Same source information, but you can clearly see, look, I can quickly give you an opinion of what the difference or the tax benefit will be for the specific entity. Okay. So yeah, this is where the compare screen becomes so handy, because the moment you've captured this information, you can actually start playing around with this. You can customize this, you can compare this, and it just makes it a very effective management and budgeting tool as well. On the provisional tax side, it gives you a lot of a lot of customizability, as we did say. So looking at this, you can capture all manner of information, your first, second, and third provisional tax payment. You're going to see a summary screen as well here, so you can see, and this will pull through any tax. So you can use this taxable income option. You can use 90% if you want to do an estimation of what your provisional tax is going to be. If you want to use the basic amount, previous years of assessment, current year tax liability, you can do a lot of comparisons with this specific program. This is for all three of your provisional tax periods for the entity as well. And there's an option on the bottom to say, you can see this is the calculator. So this is going back to what we saw on the compare sheet. But if we say, look, it's an international company, they've paid foreign taxes abroad, they should get the Section 6 quad exemption. They paid the equivalent of 150,000 or 50,000 rands worth of tax abroad, then this gets deducted from your taxable income, subject to, this should be naught, but you get the idea anyway. Okay. So, and you can print all of these as well. You can print all of your provisional estimations. That's why it's such a handy tool for provision. When filling in provisional tax returns, you can see all the details, when it should be submitted, what the company's details were, what was the expected taxable income, and so on and so forth. So, a lot of customizability in terms of this. And that is pretty much the provisional tax section. I'm not going to spend too much time on this, but just show you the basic workings of what the program can still offer you. And the reporting is so important. That's because, cover page, you can insert a custom cover page there as well. You have the tax report, you have the income statement report, balance sheet, company list, data input. So it does become quite an effective tool for management purposes as well. So as a director or manager of a company, you can go to you can take your management report, you can input this into the program, and you will have a view of what your tax liability is going to be at any specific date in time. And we did view this as well. You can work out your gross profit. You can work out what is your expected profit before tax going to be. Again, you can use this for specific months as well. So it doesn't have to be for 12 months. When you're doing provisional tax, you can include this for 7 months. So you can see, okay, if I had to pay tax today, what would I be paying, and so on and so forth. So very much user-friendly, easy to navigate, not very complex. And as I said, new features for 2024. Obviously, you can have these for all prior years as well. So you can go back 23, 22. And the more years you go back, the more comparability in terms of data you receive, because these balances will automatically pull through for the next year as well. So it takes into account, as we said, the 80% limitation on assessed losses. The system does that for you. The new Section 23 interest limitation will be done by the system for you. And of course, the big talking point in the budget was the change from the 28% to the 27% in the 24 year of assessment as well. So if you want peace of mind, I would go for the software, because the software is going to be accurate 99% of the time. It keeps up to date with the new developments in legislation. We did do an exercise, and I'm going to just turn the video back on now. I think that was pretty much in terms of support, navigating the program for today. I'm just going to turn my video back on, and this as well. So I think that was pretty much it in terms of the usability. Again, it's a very simple program to actually work, very easy to use. You can use this pretty much at any time, very limited training needed to actually use the program. And it does give you a lot of, not only it gives you a view of what your tax position is going to be. It's an effective tax planning tool you can use. It's a management reporting tool you can use. It's a provisional estimation tool you can use. And the benefits are just quite endless. We designed this for tax practitioners. We designed this for accountants to make their lives easier at the end of the day. So So that's it from my side. I'm going to hand over to Rizal now for the technical questions for the next 10 minutes or so. So you will take us through some of the workings of the program. If you have any specific questions, you're more than welcome to ask him. I'll also be here if there are any technical points that we did not address in today's training as well. So I'm just going to switch my screen off, and Rizal is going to take over with the development side for the program specifically.